Hello friends, I hope you are all doing good. Welcome back. So in our previous class we had discussed about a beautiful topic called as retirement benefit, under which we had discussed about a small concept of gratuity. Gratuity. Sir, what do you mean by gratuity? Gratuity is something which is given by employer out of love and affection. If your employer has a lot of love towards you, lot of attachment towards you, then he will give you something which he is going to give you is called as what, sir? Gratuity. Now what happens with gratuity, sir? Gratuity, is it taxable, is it exempt? What happens to it? Now gratuity, if you are receiving the gratuity at the time of your employment, during the course of your employment, then it is fully taxable irrespective of whether you are a government employee or non-government employee. If the gratuity is received by the legal heads upon the death of employee, then it is fully exempt. Then if the gratuity is received at the time of retirement, then exemption is given under section 10. How much is exempt, sir? If you are a government employee, then full amount is exempt, it is fully exempt. But if you are a non-government employee, we are going to check whether you are covered under POGA or not covered under POGA. Whether you are covered under POGA or not covered under POGA, if you are an employee who is gone by or covered under Payment of Gratuity Act, then for you the exemption will be 15/26 into salary per month into completed years of services, or the amount of gratuity received, or the statutory limit of 20 lakh rupees, whichever is less. And here what do you mean by salary per month? Salary per month means basic plus DA whether in terms or not in terms, that will give you salary per month. Sir, here salary means what, sir? Salary means the last drawn salary. The month of retirement should be ignored. Before that, whatever salary was there, that salary should be taken. Now sir, if the completed year, what do you mean by completed years of service? Completed years of service means number of years you were in that particular company, you have worked for that particular company. Now if there is any fraction in completed years of service, what should I do, sir? If there is any fraction in completed years of service, and if that fraction is more than 6 months, count it as one full year. Then we saw about POGA, non-POGA employee. In case of non-POGA employee, how much is the exemption, sir? Half into average salary per month into completed years of service, or actual amount of gratuity received, or statutory limit of 20 lakh rupees. Sir, what do you mean by average salary per month, sir? Here average salary per month means last 10 months salary, last 10 months average, which includes basic plus DA in terms plus turnover commission. Fraction in completed years should be ignored. Any fraction in completed year should be ignored. Then we have also seen written few notes. Now in calculating salary per month and average salary per month, you should ignore the month of retirement. Then statutory limit of 20 lakh rupees is applicable to a single person, an individual. So if you are working for 10 different companies, then 20 lakhs will be applied together. Altogether 20 lakh rupees will be applied. And if the question is silent, what will you treat, sir? You will treat that employee to be a non-POGA employee who is not covered under POGA. So this is what we are discussed in our previous class. Today we are going to start discussion on another retirement benefit, very beautiful concept of pension. Nice, beautiful concept. This is a very beautiful and nice concept. This concept is about what, sir? Pension. Another retirement benefit, what is it called as? It is called as pension. Now let us learn about pension. Now pension is basically divided into two arrow marks. It is basically divided into two arrow marks. So divided into two arrow marks, what do you mean by this? Pension can be uncommuted pension, or pension can be commuted pension. Sir, what is the difference between this uncommuted pension and commuted pension? Sir, what do you mean by uncommuted pension? What do you mean by commuted pension? Now uncommuted pension means the pension which is received by you on monthly basis. The pension which you are receiving on monthly basis, that is called as uncommuted pension. So let us call it as what, sir? Monthly pension. Uncommuted pension means what, sir? Monthly pension. So uncommuted pension means your monthly pension. Sir, what do you mean by this commuted pension? Commuted pension means what, sir? The pension which is received by you on a lump sum. So commuted pension means what, sir? The lump sum pension which is received by you, the huge amount of pension which you are receiving, that is called as lump sum pension. Normally at the time of retirement, you can either select to receive the pension on monthly basis, or you can take a lump sum amount, just like your gratuity, the lump sum amount which is given. You can also ask for lump sum pension. You can commute your pension, or else in middle also, say your grandfather is retired, or your father is retired from some government service and now he is receiving pension. Now there is some emergency, say there is some marriage at your house, or there is some education money which is required, and the monthly pension which is getting is not equal to satisfy the needs which are there. So now what he will do, he can commute that pension, the monthly pension which he is receiving, he can commute that pension, he can take a lump sum amount instead of taking that monthly pension. So what is the difference between commuted and uncommuted? Commuted means what, sir? The person who is in relationship, that person. No, that is committed. No, this is commuted pension means the pension which you are receiving on a lump sum, and the pension which you receive on monthly basis is called as uncommuted pension. So now uncommuted pension which is there, no, the uncommuted pension, the pension which you are receiving on monthly basis, this pension is always taxable. This is such kind of pension which is always taxable. This is that kind of pension which is always taxable. Sir, how much is taxable, sir? How much is taxable? It is always taxable, fully taxable, whether you are a government employee or not, it does not matter. So whether government employee or non-government employee. So uncommuted pension means what, sir? Uncommuted pension is a monthly pension, the pension which is given to you on monthly basis. This pension is fully taxable. This is fully taxable. This amount is fully taxable irrespective of who you are, irrespective of whether you are a government employee or non-government employee. This is an amount of pension which is fully taxable. Sir, then what is this lump sum pension? This lump sum pension you are going to get an exemption. For this lump sum pension you are going to get an exemption. Sir, under which section am I going to get an exemption? It is exempt under section 1010A. So previous section which we studied was 1010. So this is which section, sir? This is 1010A. It is exempt under which section? It is exempt under section 1010A. Sir, how much is exempt, sir? How much is exempt? 2 arrow marks. 2 arrow marks. First, you should see whether you are a government employee or non-government employee. So if you are a government employee, if you are what, sir? If you are a government employee, if you are who, sir? If you are a government employee, then how much is exempt? Like always, it is fully exempt. So government employee is receiving a commuted pension, a lump sum amount of pension government employee is receiving, that commuted pension will be fully exempt. But if you are a non-government employee, then there is a limit for you. If you are a non-government employee, then there is a limit for you. For non-government employees, there is a limit. Sir, how much is this limit, sir? Oh, sir, how much is this limit? Just a second, I'll tell you the limit. Now, for non-government employee, please note. So, you please understand this point carefully now, whatever I'm going to tell. So pension, check whether the pension is a pension which you are receiving on monthly basis or you are receiving it on a lump sum amount of pension. So the pension which you are receiving it on monthly basis, even after retirement, the pension which you are receiving on monthly basis, that will be taxable, and it will be fully taxable whether you are a government employee or non-government employee. And it is taxable as what, sir? It is taxable as salary. If you are receiving on lump sum a commuted pension, if you are receiving, then it is exempt under section 1010A. How much is exempt? The amount of exemption is depending upon you are a government employee or non-government employee. If you are a government employee, then it is fully exempt, and if you are a non-government employee, then you should check whether that person is also receiving gratuity or not. What should I check, sir? Check whether employee has also received gratuity or employee has not received gratuity. So you should also check whether the employee has received any gratuity or he has not received any gratuity. So the non-government employee whose pension you are taxing, no, whether that person has also received gratuity, meaning at the time of retirement whether he has received only pension amount or he has received pension as well as gratuity amount. He has received gratuity also. So if he has also received gratuity, then the amount of exemption for him will be, if he has also received gratuity, then exempt amount for him will be what, sir? For him the exempt amount will be total pension into 1/3. Total pension into 1/3. And if he has not received the gratuity, then exempt amount is what, sir? For him the exempt amount will be equal to total pension into 1/2. Please note. Now what is the provision telling? The exemption amount is your total pension into 1/3 or your total pension into 2/3. Total pension into 1/3 if you have also received gratuity, because you are also receiving some benefit, you are receiving one more benefit which is gratuity. I am going to give a less exemption for you in this case. I am going to give only 1/3. Total pension into 1/3 exemption will be given to you. If you are not receiving gratuity, that means you are not getting any benefit over there of gratuity. Therefore, I will give more exemption to you for you. Total pension, I will not take, please note. I am not going to take commuted pension into 1/3. Please note. What is this point telling? This point is not telling commuted pension into 1/3. They are telling total pension into 1/3. Total pension into 1/3 will be exempt, and total pension into 2/3 half will be exempt. So this is only the provision with respect to pension. Very small concept and a very small provision with respect to pension. Obviously we'll do some problems, beautiful problems we'll do. So pension, I'll repeat, pension, check whether it is a commuted pension or uncommuted pension. If it is a commuted pension, if it is an uncommuted pension, that means it is a monthly pension. Monthly pension is always taxable, fully taxable, for whom, sir? All the categories of employee, whether you are a government employee or non-government employee. Then we are going to check whether you are a commuted pension. If you are receiving a lump sum pension, commuted pension, then check whether he is a government employee or non-government employee. If he is a government employee, then it is fully exempt. If he is a non-government employee, then check whether he is also receiving gratuity or he is not receiving gratuity. If he is also receiving gratuity, then total pension into 1/3 is exempt. If he is not receiving gratuity, then total pension into half or 2/3 is exempt. Now let us take some problems. Let us do one problem from ICA material, and there are two beautiful problems. One from your CMA material and one from exam question. One beautiful exam question is there. We'll solve that also. So this is the question. Please check this question. Mr. Sagar, who is retired on 1st of October 2022, is receiving 5,000 rupees per month as pension. On 1st February 2023, he commuted 60% of his pension and received 3 lakh rupees. So what is this point telling? Sagar retired on 1st of October, and from date he started receiving monthly pension of 5,000 rupees. Then on 1st of February 23, he commuted his pension. How much pension? He commuted 60% of his pension. For that 60%, how much did he receive? He received 3 lakh rupees. So can I use my general knowledge now, common sense, and say 60% pension he got commuted. He commuted how much? He commuted 60% pension. For the 60% he received 3 lakh rupees. So can anyone tell me how much is his total pension? 100% will be equal to what, sir? Can anyone tell me? Yes, sir. Sir, his X or his total pension. Sir, his total pension will be 3 lakh divided by 60%, which is equal to 5 lakh. Correct? Which is equal to how much, sir? 5 lakh rupees. Now he commuted. You are required to compute his taxable pension, assuming he is a government employee, private sector employee, and also receiving gratuity, private sector employee not receiving gratuity. So what will be your answer in all these different cases? What will be your answer? So let us check the answer. So total pension. Now please note, he was receiving 5,000 rupees per month. He was receiving 5,000 rupees per month, meaning before commutation or before commuting his pension, he was receiving how much rupees, sir? He was receiving 5,000, which is equal to what? See, basically normally the pension which you receive on monthly basis will be a fixed percentage of your total pension. It will be a fixed percentage of your total pension. So your total pension was 5 lakh rupees. Of that I was receiving 5,000 rupees. So can I say 5,000 divided by 5 lakh, which is equal to 1% into 100 obviously. So 1% of my total pension was received by me as monthly pension. 1% of my total pension was received by me as monthly pension. Now the leftover balance in my total pension is only 2 lakh. Because I got 3 lakh rupees commuted, the leftover balance is only 2 lakh rupees. So obviously I am going to receive 1% of this 2 lakh. Going forward I am going to receive what, sir? 1% of this 2 lakh, which is 2,000 rupees per month. I'll repeat once again. See, I was receiving a pension of 5,000 rupees from 1st October. Because I got my pension commuted, I took a lump sum amount. See, my total pension was 5 lakh rupees. Out of this 5 lakh, I have withdrawn 3 lakh rupees. Now leftover pension is how much? Only 2,000 rupees. Now I was receiving 5,000 for 5 lakh. Now the leftover is 2,000. Leftover is 2 lakh. So 2 lakh into 1% I am going to receive. I am going to receive how much, sir? 2 lakh into 1%. 2 lakh into 1%. Or there is one more method. If you have not understood this, basically this is the right method, but if you have not understood this, then one more simple method. See, I got my 60% pension commuted, correct? I got my 60% pension as commuted. Now when I got my 60% pension commuted, can I say my 40% pension is uncommuted? Can I say my 40% pension is uncommuted? So 40% of what, sir? 40% of 5 lakh rupees. 40% of total pension is uncommuted, which comes to how much? 2 lakh rupees. Or 2 lakh rupees into 1%. Or see, I was receiving 5,000 per month. When was I receiving 5,000 per month? I was receiving 5,000 per month when the pension was not commuted. Now because I got 60% pension commuted, so 5,000 into 100% minus 60%, meaning 60% is getting commuted. 100% was the total pension. Now I am commuting 60%, the leftover is 40%. So 5,000 into 40%. How much is that? How much is this? 5,000 into 40%, which is 2,000 rupees. So you do it under this way or this way, you will get the same amount, meaning after commutation of your pension, the amount of monthly pension which you are going to get is how much, sir? 2,000 rupees per month. It is like they say you hold your ears like this or like this, it means the same. So here you do it, you take the total pension, see the percentage of total pension what you are receiving, check the percentage, and whatever uncommuted pension or balance pension is there, take that percent, apply that percentage on that. Or straight away, what is the balance uncommuted pension which is available with you? 40% is available, total pensions 40% is uncommuted. So monthly pension you were receiving 5,000 rupees, now you are going to receive only when it was 5 lakh you were receiving for how much? When it was 5 lakh you were receiving 5,000 rupees, and now when it is 2 lakh, how much you are going to receive? X you want to find, you will get the same answer. Any method you want to follow, you can follow. Now why are we doing this, sir? Because once you get your pension commuted, your total pension will reduce. Because your total pension is getting reduced, your monthly payout will also reduce. The monthly amount which you are going to get going forward, that will also reduce. So we have done this particular computation. Okay, so now let us do the question, let us solve the question. Now what is the question telling? The question says you are required to compute the pension. Answer: computation of taxable pension. Who is the person? Mr. Sagar. So this is one thing which you should always write in your examination. Mr. Sagar, name of the assessee, previous year 22-23, assessment year 23-24. Particulars: he is a government employee. He is, I'll just write it as gratuity employee, non-gratuity employee. Okay, so first case is a government, second case is not a government employee and receiving gratuity, not government employee and not receiving gratuity. So first he'll write the amount of pension which is received. No, there are two types of pension. Point number one, first is uncommuted pension or monthly pension. Uncommuted pension. So the monthly pension which they are all receiving is how much? Sir, they were receiving 5,000 rupees per month. From which month they were receiving? From the month of October. 1st October they were receiving 5,000, and on 1st of February they say he got commuted. How much percentage he got commuted, sir? 60% he got commuted. So can I say till 1st of February, October, November, December, January, 4 months he was receiving 5,000 rupees. After that he is going to receive 2,000 rupees. So I'll write what, sir? 5,000 rupees into 4 months plus 2,000 rupees into 2 months plus what, sir? 2,000 rupees into 2 months. So what is the total amount now? What is the total amount now, sir? 5,000 into 4 plus 2,000 into 2, which is 24,000. So how much pension he has received, sir? For all the cases, the monthly pension which he has received is, that is nothing but uncommuted pension which he has received is 24,000. Is there any exemption available for them? Answer is no, there is no exemption available for them. Point number B. Then it is commuted pension, which is nothing but the lump sum pension. Commuted pension, what is the amount received? Amount received is 3 lakh rupees. He got 3 lakh rupees commuted. So amount received is how much, sir? 3 lakh rupees. From this 3 lakh rupees less exemption under section 1010A. For government employee, full exemption will be given. For non-government employee, if he is receiving gratuity, working note number 1, exemption under section 1010A for non-government employee receiving gratuity. How much is the exemption available for non-government employee who is receiving gratuity? Can I say the amount of exemption is total pension into 1/3, which is equal to how much, sir? Total pension is 5 lakh rupees into 1/3 is how much, sir? 5 lakh divided by 3, 1,66,667. Then working note number 2, exemption under section 1010A for non-government employee not receiving gratuity. So if he is not receiving gratuity, if he is a non-government employee, what is the exemption? Sir, it is total pension into half, which is equal to 5 lakh into 1/2, which is 2,50,000. How much is it, sir? 2,50,000. So let us do the subtraction now. So 1,66,667 minus 2,50,000 50,000. So what is the difference, sir? The difference comes to the total taxable amount comes to what, sir? This minus this. So here it will be 24,000, 1,53,333, and then here it is 74,000. So this is your taxable pension. So you can also write a note over here. Note: pension received by government employee. So first you write commuted pension. Instead of pension, just write it as commuted pension received by government employee is fully exempt under section 1010A. So this note will be applicable. So first point number 1, point number 2, point number 3. Then you can write one more note, note number 2. So this should be your first note basically. Uncommuted pension is taxable for all employees. Uncommuted pension is taxable for whom? It is taxable for all employees. That is sufficient, yeah. So this is the answer for question number 1. So I am going to give you one question as homework. I mean, very easy question, similar question. You please practice it yourself. So this is from CMA material. Mr. Amit has retired from his job on 31st of March 2022. From 1st of April 2022, he is entitled to a pension of 3,000 rupees per month. On 1st of August 2022, he got his pension, 80% of his pension commuted and received 1,20,000. So can I say his total pension will come to 1.5 lakhs? And compute the taxable pension if he is a government employee, if he is a non-government employee receiving gratuity, and if he is non-government employee not receiving gratuity. So here only his monthly pension will be taxable. Here both monthly and so his total pension is how much, sir? So total pension comes to 1,20,000 divided by 0.8. So it comes to 1,50,000. So monthly pension is how much, sir? I mean, you try it yourself. Why am I doing it? Okay, you try it yourself, no issues. So in first case, the answer will come to 16,800 monthly pension, which is how much? 3,000 into, he is going to receive till July, April, May, June, July, 4 months, 3,000 into 4 months, 12,000 rupees. After that he is going to receive 3,000 into 0.2, 600 into 8 months, 4,800. So it comes to 16,800. So second point, it will be 16,800 plus uncommuted pension. I'll write the answer. It will be 61,800, and last case it will be 86,800. Second, he is not receiving gratuity. Third, he is receiving gratuity. So you solve it yourself. Let me do a beautiful question for you. Let me do a very beautiful, very easy, not easy obviously, very beautiful question for you. A very nice and important question. Shahrukh. Hey Shahrukh. Very important question. I would love it if you try it yourself. So see this question, I would love it if you try it yourself. Shahrukh joined Priya Sarees on 1st of December 2008 and resigned from his service on 15th of September 2022. He received a salary of 20,000 rupees per month till March 2022 and thereafter 25,000 per month, and he also was entitled to dearness allowance at 50%, which forms part of his retirement benefit. On retirement, he received a gratuity of 5 lakh rupees and he was also entitled to a pension of 10,000 rupees per month with effect from 16th of September 2022, meaning next from the date of his retirement, next day. He got 75% of the pension commuted with effect from 1st of January 23 and received a sum of 7,50,000 as commuted pension. So 75% he got commuted, 7,50,000 he received. So total pension is, obviously by seeing only you can tell, it is 10 lakh rupees. Compute his gross salary. Nice. So here this question is not only about pension but also about gratuity. So here you have points with respect to pension as well as gratuity. So now let us solve this question. Now the beauty of this question is, sir, pension to anyways we can find, sir, no issues. Pension they have given, monthly pension they have given, they have given you monthly pension, they have also given you commuted pension. But for gratuity there is a problem. Sir, what is the problem in this case? What is the problem in gratuity, sir? In case of gratuity there is one small problem. What is that problem? They have not given you number of completed years of service. How many years he has completed in service is not specified over here. They have not given you what, sir? Completed years of service. So the question is, what is the completed years of service? Sir, what, sir? Very simple, sir. Sir, completed years of service is very simple. What is very simple? Sir, see, sir, he joined the company. He joined the company on 1st of December 2008, sir. And he resigned from company on 15th of September 2022. Sir, this period, you only told us no, sir. You only told us no, sir. Completed years means that birthday you should see, when you were born, when you, what is your age as on today, etc. Just like this, I will do this also, sir. Just like that, I will do this. So tell me how much is the completed years of service. Sir, he joined on December. So 1st December 2018 to 30th November 2019 is 1 year. So if I do like this, I should do till 2008, 8, 9, sorry, 8, 9, 9, 10, 10, 11, 11, 12, 12, 13, 13, 14, 14, 15, 15, 16, 16, 17, 17, 18, 19, 20, sorry, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23. Yeah, so this is the point over here. We have got the points 21, 22. So how many years he has completed? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 14, 14. Oh, wait. 22, 23 will not come. So this date is till what, sir? 30th November 22. So he has completed 13 years plus how many months? So from September I am going to see. So from December, 1st December 21 to resignation date is 15th of September 22. So December, January, February, March, April, May, June, July, August means 9 months, 13 years, 9 months, and can I say 15 days. How many years has he completed? 13 years, 9 months, 15 days. Anyways, I hope you have understood the computation. This is the only computation which was involved over here. I'll do one thing. I'll write this computation over here. So how many years has he completed, sir? He has completed 13 years, 9 months, and 15 days. Now I hope now you can solve the answer. Sir, but the question is not clear, sir, whether is a POGA employee or non-POGA employee. Write a note. Chinch, the question is not clear. It is assumed the employee is not covered under POGA. Obviously in examination you should write it completely Payment of Gratuity Act. So what will be your answer over here? The question says you are required to compute the gross salary. You are required to compute the gross salary. So I'll try to complete the answer in this page. Obviously working will be in my next page. Mr. Shahrukh, previous year 22-23, assessment year 23-24. Please note, this year also, in the year 22-23 has worked till September 2022. So because he has worked till September 2022, obviously he'll get salary till that date. So particulars, rupees and rupees. So he is going to get basic pay. How much is the basic pay, sir? Basic pay is 20,000 till March. Okay, after that it was 25,000. So current year he is going to receive 25,000 till September. So April, May, June, July, August and September, 15 days. So it is 5.5. 25,000 into 5.5 is how much? So please note, always show this computation in brackets. 100% required. If you don't show this computation, you are going to lose a marks. You are 100% going to lose marks. So the total comes to how much? 1,37,500. Or 1,37,500. Then he received a salary of 20,000 per month till March 2022. Thereafter 25,000 entitled to dearness allowance 50%, which forms our basic. Dearness allowance. Dearness allowance is how much? 50%. 50% of what? Nothing is given. Nothing is given means what? Sir, if nothing is given, then 50% of basic pay. 1,500 into 50%. 50% of basic pay, how much will it be? Sir, it will come to 68,750. How much does it comes to? 68,750. How much does it comes to? It comes to 68,750. Okay, so we have done this basic, we have done this dearness allowances. Then we have gratuity. Gratuity. Amount received less exempt under section 1010. How much gratuity he has received? 5 lakh rupees. Now what is the amount gratuity exemption which he is going to get? Sir, gratuity exemption, we should do the computation. Yes, working note number 1. Gratuity exempt under section 10. Non-POGA employee. How much is exempt? 1, 2, 3. Half into average salary per month into completed years of service. Half into average salary per month into completed years of services, or actual gratuity received, or the statutory limit. So now we should first find completed years of service. We have already find. So average salary per month, we should take 10 month average. So first I am going to take what, sir? Basic pay, then dearness allowance forming part of retirement, then turnover commission. How much is the basic pay? Sir, they have told basic pay we should take off last 10 months. So he retired. Month of retirement should be anyways ignored. So I will take for 4 months. April, May, June, July. No, 4 months. 5 months. Till August. it was 25,000 into 5 months, and before that how much was it? And before that it was 20,000 rupees. Obviously into 5 months, how much is it coming to? So 25,000 into 5 is 1,25,000. 20,000 into 5 is 1 lakh. So it comes to 2,25,000. And 2,25,000 into 50%, 1,12,500, if it forms part of retirement benefit and there is no turnover commission. So it comes to how much, sir? 3,37,500. This is your 10 months salary. 10 months salary. Average salary is how much? 337,500 divided by 10. 33750. 33,750 rupees. So how much does it comes to, sir? It comes to 33,750 into completed years of service is 13 years into half, which comes to how much? 2,19,375. Actual amount received is 5 lakh and 20 lakhs, whichever is less. So here it is 2,19,375, which is, so the taxable amount comes to 2,80,625. Less. Next point is what, sir? Then we have pension. So in that first we have commuted pension, monthly pension. First uncommuted pension, monthly pension. Monthly pension is obviously fully taxable. How much he has received? Sir, he has received from 16th, he has received how much? 10,000 rupees till 1st. So from 16th till December he has received 10,000 rupees. So can I say September 15 days, October, November, December 3 months, 3.5 months. So 10,000 into 3.5 months. Sir, then he commuted how much? 75%. So he was receiving 10,000. Now he is going to receive only 25%. Commuted 75% means leftover is 25%. So he is going to receive how much monthly, sir? 2,500 rupees from January. Jan, Feb, March, 3 months. 2,500 into 3 months. 10,000 into 3.5 plus 7,500. 1 lakh. No. Okay, 7 months I have done. Okay, the amount comes to 42,500. The amounts come to, so 35,000 plus 2,500 into 3 months. So it comes to how much, sir? 42,500. Then we have commuted pension. Commuted pension total amount is how much? 7,50,000 less exempt. So you can show it separately, exempt under section 10A. It is better to show as a working, but for the time being I am showing it over here only. How much, sir? Or else I'll show it separately. Why, sir? Why to lose 1 marks without showing a note? I want that 1 mark. Uncommuted pension exempt under section 10(10)(A) is equal to total pension into 1/3. Sir, how do you know whether it is 1/3 or 2/3 in this case? How do you know whether it is 1/3 or 2/3? He is also receiving gratuity, no? He is also receiving gratuity. So how much should it be? It should be obviously 1/3. So how much does it come to? Total pension is 10 lakh rupees into 1 divided by 3. comes to some 3,33,333 rupees. 0.333. So 3,33,333 rupees is exempt. So taxable amount will come to 4,16,667. So we have total 9,69,040 to 946,042. This is your gross salary. So this is your gross salary in the present case. Nice and beautiful question. I mean, I think we have done ample amount of questions for pension also. Now let us conclude this video over here only, or maybe we'll take a short break and we'll meet right after the break and discuss about next retirement benefit. Hello friends, I hope you are all doing good. So this part of the lecture is getting re-recorded due to some technical reason. I don't know what happened, that the audio did not get recorded in my previous recording which I did for this particular topic, leave salary, leave encashment. So the audio could not get recorded, so I'm re-recording the lecture. So I will discuss this topic again. So you may see that there is some change happening, but that is due to re-recording of the lecture. So in this lecture, in this particular topic, our discussion which we are doing, we are going to discuss 3 retirement benefits. So till now we have discussed what, sir? We have discussed about gratuity, pension, and then it is we have discussed about gratuity, then pension, leave salary, retrenchment compensation, and VRS. So gratuity was discussed in our previous class. Pension, you would have just now seen that. Leave salary we are going to discuss now, and retrenchment and VRS is after this particular leave salary discussion. Okay, let me just straight away start the discussion on leave salary. Nice and very beautiful topic. So I'll just re-explain all the concept to you, the entire concept. Obviously re-explain means for you it is the first time only. Leave salary, or it is also called as leave salary encashment, or you can also call it as leave credit encashment, or you can also call it as leave credit encashment. Sir, what do you mean by this leave salary or leave salary encashment or leave credit encashment, sir? What do you mean by this leave salary encashment or leave credit encashment? What happens is, many companies, what they do, they tell their employees that you do one thing, you can take one, say one day leave in a particular month. For that leave also we are going to pay. Some companies may tell you that you can take leave of 30 days in a year. So in a year, entire year you can take 30 days leave. Some company may take, you can take 2 months leave in entire year. We are going to pay for that leave period also. So we are going to pay you for that leave period. So now you are getting payment for that day also which you did not work, that normally happens. Now company, what do they do is, that normally happens that you can take a leave, for that leave day also we are going to make the payment. Now there are some employees who are workaholic, who never take any leave. Now to differentiate them with those people who are taking leave, what company does is, to these employees who are not taking leave at all, the company says we are going to give you some benefit. See, because you are not taking leave, though we are ready to pay you for that leave period, you have not taken leave, I am going to give you extra salary. I am going to encash that leave for you, that leave which you had not taken. Now because you had not taken that leave, company out of gratitude, we want to thank you, we want to pay you for that period. Sir, normally they are getting paid, no sir, yes, but now extra payment they are going to do, which is called as leave salary or leave encashment. Let us take an example wherein company says in 1 month an employee can take 2 days leave. Meaning, if any employee is taking 2 days leave in a month, the company is going to pay money for that. Even though he is taking a leave, the company is not going to deduct any salary, etc. The company is going to pay. So tell me, how many days will it be in a year? So in a year, it will be 24 days. So a person can take leave for 24 days in a year. 24 days in a year. Even if he takes leave, the company is going to pay his salary. Now there may be few people who are not taking leave at all. Or maybe some people take only 4 days leave out of 24 days. So the 20 days leave which he could have taken, but he has not taken, no, for that the company is going to pay some extra money. They are going to encash that leave. That is called as leave salary or leave salary encashment or leave credit encashment. Leave salary, leave credit or leave credit encashment. Now in this discussion, there are few important words which you should understand. Now the company says we are going to allow you 24 days leave in a year. So what is this 24 days called as? And let us assume out of this, one of the employees is taking leave for 4 days. And for 20 days he has not taken any leave. Now, so total days which the company says that you can take leave is 24, out of which 4 days leave is taken and 20 days leave is not taken. Now what are these different terms called, sir? Because these terms are important. Now 24 days is what, sir? 24 days, these terms are important for our discussion. 24 days is the days for which leave is allowed by the company. Leave is allowed by the company for how many days? For 24 days company is allowing you the leave. What is this 4 days, sir? 4 days is the leave which is taken by you. Correct? So company had allowed you, company had given you permission that you can take a leave for 24 days. So this is called as what, sir? Leave allowed. You had taken leave for 4 days. This is called as leave which is taken by you or leave which is availed by you. And this 20 days is the leave which is not taken by you, correct? So out of 24 days which you could have taken, you have taken only for 4 days. So this 20 days is leave which is not taken by you. So what will this be called as, sir? This will be called as your leave credit. This will be called as your leave credit. You can also call it as your leave balance. Or you can also call it as your unutilized leave, the leave which is not utilized by you. Or you can also call it as leave saved. Or you can also call it as what, sir? Leave saved. So this 20 days leave which is not taken by you, which is a leave credit, which is unutilized leave, which is a leave balance which is available, for that the company is going to pay. You. So this particular salary is called as leave salary, leave credit encashment or leave salary encashment. So sir, why is these different terms required, sir? Because you get paid for your credit. You get paid for your leave credit days. So what is leave credit, sir? Can I say leave credit is leave allowed minus leave taken? So what is the credit? The credit is nothing but the leave which is allowed to you and minus the leave which is taken by you. So the balance amount which is there, that is the leave which you could have taken but you have not taken. You have worked on those days also. Because you have worked on those days also, company is going to pay you salary for those days, extra salary for those days. That is called as your leave salary or leave encashment. Leave salary or leave encashment. So I hope you have understood the meaning of this word. So I'll just write it in one line. Leave salary means encashment of leave credit. So if you are encashing your leave credit, the leave credit which was there with you, you are now encashing it. You are getting money for that particular period also. That is called as leave salary. Now one important note, while solving questions, you may find that the company is allowing a leave of 45 days, the company is allowing a leave of 15 days in a year, the company is allowing a leave of 60 days in a year, etc. So as per company policy, they may allow any days, any number of days. For example, in this case, how many days they are allowing? 24 days they are allowing. So the company may allow any number of days leave, but as per income tax law, there is a limit. As per income tax law says, as per income tax law, leave allowed is 1 month. So income tax law says you can allow a leave of 1 month for calculating these benefits, etc., leave salary benefit exemption which is available to you. As per income tax law, you will be allowed a leave of 1 month for a completed year of service. For a completed year of service. So for each year which you have completed, in service, you will get an leave allowed. The leave which is allowed as per income tax law is 1 month. So as per income tax law, 1 month. So if I want to get the leave credit, then 1 month minus the leave which is taken by you, that will give you leave credit. Sir, can you please tell us how much is the exemption? We understood the meaning of leave credit, sir. Leave credit is nothing but the leave which is not taken by you, leave which is unutilized by you, leave which is available in your credit, and leave allowed is the number of days the company is allowing you to take the leave, and leave taken is nothing but the leave actually which is taken by me. Now, how much exemption will you get, etc., we'll discuss now. So leave salary, when are you receiving it? 2 arrow marks. Leave salary, when are you receiving it? 2 arrow marks. If it is received during employment, what will happen? And if it is received at the time of retirement, then what will happen? So if the leave salary is paid to you, or you are receiving the leave salary during the course of your employment only, you are still working for the company and you are receiving, or it is received, screen got stuck, or it is received at the time of your retirement. Or when is it received, sir? It is received at the time of your retirement. Now what will happen in this situation when it is received in the course of employment and when it is received during your retirement? Obviously, as we all know, if you receive any retirement benefit during the course of your employment, it is fully taxable. Similarly, leave salary which is received by you during your employment, in the course of your employment, it is fully taxable. It is fully taxable. And how much is taxable, sir? Fully taxable, whether you are a government employee or non-government employee. Whether you are a government employee or non-government employee, it will be taxable fully. How much will be taxable? Full entire amount will be taxable. However, if you are getting the leave salary at the time of your retirement, then it is exempt. Then it is exempt under section 10AA. So 10AA. So if it is received at the time of your retirement, then it is exempt under section 10AA. Sir, how much is the exemption, sir? Again, exemption depends upon who you are. whether you are a government employee or you are a non-government employee. So if you are a government employee, then the amount exempt will be same full amount. If you are a government employee, how much exemption will you get? If you are a government employee, you will get an exemption of full amount. And if you are a non-government employee, then what will happen? There is a calculation which you have to do. If you are a non-government employee, in such case, how much is the exemption, sir? In this case, the exemption is, point number 1, the leave credit which is available with you. This leave credit is required to be taken by you in months into average salary per month. Into average salary per month. This leave credit, what leave credit is nothing but leave allowed minus leave taken. So you should take that leave credit and you should take it in months. You should take it in months. Then 10 months into average salary per month. So basically you are supposed to take, second point is you are supposed to take 10-month period salary. So 10 months into average salary per month. Then you should take what, sir? Point number 3, you should take your actual amount received. Actual amount received. So what is the actual amount of leave salary which is paid to you? And point number 4, the statutory limit. The limit as per law. Sir, what is the statutory limit? The limit as per law is rupees 3 lakh. So that is the maximum benefit which can be given to you, whichever is less. Limit as per law, whichever is less. I'll repeat. So leave salary, if it is received during the course of employment, it is fully taxable. If it is received at the time of retirement, then it is exempt. How much is exempt? If you are a government employee, fully exempt. If you are a non-government employee, for you the exemption will be determined as per section 10AA. What is the exemption which will be given to you? Whatever leave credit you have into average salary per month, then 10 months into average salary per month, actual amount received, or statutory limit. Sir, what do you mean by average salary per month? Oh sir, what do you mean by average salary per month? So here average salary per month means what, sir? Same your last 10 months average. Very important point. One point is very important over here. You should take last 10 months average. Last 10 months average up to the date of retirement, up to the date of retirement, up to the date of retirement. Sir, what do you mean by this up to the date of retirement? That means the month of retirement should be also be included. So you have retired on a particular day, say 15th of July, you should take salary till 14th. You should take salary till 14th of July. So what is this, sir? This is basic plus DA. You should take last 10 months basic pay plus dearness allowances in terms plus your turnover commission. So do the total, you will get your salary, last 10 months salary, divided it by 10, you will get average of last 10 months salary. So two important note which you have to keep in mind over here. Note number 1, fraction in completed year of service fraction in completed year I have written. Fraction in completed year of service should not be ignored. Fraction in completed year of service, no, I think we should write the point as salary should be taken till the till the date of retirement. So salary should be taken till the date of retirement. Then one extra point which we'll have to write, that is if a person retires on 15th July, then salary till 14th July should be considered for computation. So now if I take last 10 months salary, so I should take, in this case, last 10 months salary means what, sir? Last 10 months salary will be, say, I'll have to take, say, 15th June to 14th July is 1 month. Similarly, just like that, I should take 15/5 to 14/6, then 15/4 to 14/5. So like this, I will have to go for last 10 months. I will have to take last 10 months salary. So number of days, that the month of retirement should also be taken into consideration. Month of retirement should also be taken into consideration. Leave credit you should take in month. So if the company says for one completed year of service you will get 1 month leave, then you will have to take how many years he has completed, 20 years, so into 1 month, so 20 months you will have to take. Now this is all about the provision. Let us do one question. Let us do one beautiful question. Mr. Gupta retired on 1st of December. Gupta retired on 1st of December 2022 after 20 years of service and received a leave salary of 5 lakh rupees. Other details are given below. Basic salary is 5,000 rupees per month. Dearness allowance is 6,000 rupees per month. 500 rupees is the commission, and 1,000 rupees per month is what, sir? Bonus is anyways not relevant for our calculation. And leave availed during the service. Leave availed means leave taken during the service is how much? 480 days he has taken the leave. He is entitled to 30 days leave every year. So the company policy is that you will get 30 days leave in a year. You will get 30 days leave in a year. That means you will get 1 month leave in a year. So you have completed 20 years. So 20 month is your leave credit. So what is total number of days? So 20 years into 30 days. So how many days you have completed? So leave allowed by the company is how much? 600 days. So can you tell me what is the leave credit? Sir, we have leave allowed, we have leave taken. Leave allowed is how much? 600. Leave taken is how much? 480. So difference is nothing but leave credit. What is the difference? Difference is 120 days. So this 120 days is your leave credit. 120 days is what, sir? Your leave credit. Accordingly, you have to apply that formula and do the answer. What will be your answer if he is a government employee and if he is non-government employee? Let us do the answer. Now please note, the question does not say whether the commission is turnover commission or not. What assumption should be taken? I'll repeat the assumption once again. So for CA students, for CA obviously intermediate, for CA inter student, what you should follow? If the question is silent about the commission, if the question is silent about commission, always write a note. Whether you are a CA student, CMA student, always write a note. But what assumptions you are supposed to take, I am telling. So if the question is silent about commission, what type of commission it is, you should always assume it is not turnover based commission. Your assumption should be what, sir? it is not turnover based commission. For example, in this case the question says commission is 5,000 rupees per month. So what will your assumption be? Your assumption should be that it is not turnover based commission. And see, normally turnover based commission means what? The commission is given to you in a fixed percentage of turnover. Commission is given to you in a fixed percentage of turnover. So here if the commission is how much? If they say that the commission is 500 rupees per month, then it is not any percentage. They are just telling 500 rupees you are going to get commission. So commission is required to be taken only if it is given as a percentage. If they say this much percentage, etc., then only you should take, because the law says turnover commission means what? The commission based on a fixed percentage of turnover. So in this case your assumption should be what, sir? Your assumption should be it is not turnover based commission. Similarly, this was about commission, and similarly about DA. Dearness allowance. So if your question is silent about dearness allowance, what is your assumption? Your assumption should be assume it is DA not in terms. Your assumption should be assume that it is DA not in terms. But these assumptions are exactly opposite for CMA students. For CMA students, for CMA inter students. So if the question is silent about commission, what should your assumption be? Your assumption should be, as it is assumed, you should write an assumption. It is assumed that it is, please note this point is only when the question is silent. If the question says it is turnover based commission, what will you treat? Obviously you will treat what the question is telling. If the question say DA in term, the DA is forming part of retirement benefit, what will you think? Obviously you should think that it is for forming part of retirement benefit. Accordingly you should take for your computation. So if the question is silent about commission, assume it is assumed I am writing the note. So assume it is turnover based commission. So you should assume that it is turnover based commission. And what if the question is silent about DA, sir? If the question is silent about dearness allowance, then what will happen? If the question is silent about dearness allowance, in such case what will happen? If the question is silent about your dearness allowances, in such cases what will you do, sir? If the question is silent about dearness allowance, assume it is DA in terms. Assume it is DA in terms. See, basically what will happen from this assumption, sir? So if you are going to assume that the commission is turnover based commission, what will happen? If you are going to assume that commission is turnover based commission, and if you are going to assume that DA is in terms, then employee will get benefit. Employee will get benefit. How, sir, employee is going to get benefit? So it will be added to his salary. So if it is turnover based commission, I am going to add in the formulas, whatever formulas we are seeing over here, it will be added over here. And if it is DA in terms, it will be added over here. So if it is going to be added, then the amount of exemption which you are going to get will be more. So if it is a turnover based commission, or if it is a dearness allowances in terms, then it will be added in your computation, that retirement benefit computation. So your exemption will increase. So if your exemption is increasing, that means what, sir? The employee will get benefit out of it. But CA Inter or ICAI of CA Institute, what they assume is, no, we should not give benefit to employees. Normally what will happen? Okay, you have taken the benefit, but if the officer feels the question is silent, if from officer's angle, if you think, officer will always want that you should not take turnover commission, you should not take dearness allowance. Why, sir? Because if you don't take it, officer will get benefit. How will officer get benefit? If your that salary is less, your exemption will be less. If your salary is less, your exemption will be less. If your exemption is less, your income will be more. If your income is more, your tax will be more. So from the taxation from the income tax officer point of view, the CA Institute is following. From the employee point of view, CMA Institute is following. Okay, but I have told you what assumption is required to be taken by each of the institute. So I'll repeat once again. If you are a CA intermediate student, then for you, if the question is silent about commission, assume it is not a turnover based commission. And similarly, if the question is silent about the type of dearness allowance, assume it is not in terms. Assume it is dearness allowance not in terms. Similarly, if you are a CMA student and if the question is silent about the commission, assume it is turnover based commission. And if the question is silent about dearness allowance, assume it is dearness allowances in terms. Exactly opposite assumption, because in your books the questions are solved accordingly. Anyways, why to take risk? I will always write a note. So note, since the question is silent about type of commission, since the question is silent about type of commission, it is assumed that commission is not turnover based. It is assumed that commission is not turnover based. So first we will have to calculate, first we will have to find leave credit. What is leave credit, sir? Leave credit is equal to leave allowed minus leave taken. What is leave allowed by the company? Sir, we calculated about is 600 days. And what is leave taken? Sir, it is 480 days. So how much is leave credit? 120 days. Leave credit in months is how much, sir? Divided by 30. 4 months. So we have got our leave credit. Now they have asked us to find what, sir? Taxable leave salary. Now what will be your taxable leave salary? Computation of taxable leave salary. Particular, if you are a government employee, what will happen? If you are a non-government employee, what will happen? So first, amount received. How much have you received? Sir, amount received is 5 lakh rupees. So both of them same amount will write, less exemption under section 10 AA. 10 AA for government employee, entire 5 lakh rupees is exempt. So for him taxable leave salary is how much? 0. For non-government employee, how much is exempt? Sir, we should write the formula. Working note number 1. Exempt leave salary for non-government employee. For non-government employee, how much is exempt, sir? Sir, for non-government employee, it is 1, 2, 3, 4, whichever is less. Take 1, 2, 3, 4 and take whichever is less. Sir, what is this 1, 2, 3, 4? So first take leave credit into average salary per month then you should take 10-month salary, 10 months into average salary per month, then actual amount which you have received, and the limit. Now sir, what do you mean by salary over here? Last 10 months salary till the date of retirement. Sir, salary, average salary per month is equal to basic pay, which is 5,000 rupees. So he retired in the month of on 1st of December. So can I say from November to last 10 months I should take? Last 10 months they have told from 1st of April there was an increment of 1,000 rupees. So the salary 5,000 rupees includes the increment, or it does not include increment? This 5,000 rupees is the salary. Obviously when they are giving the information, the salary is what, sir? The salary is at the time when you have retired. The salary 5,000 rupees, 3,000 rupees, etc. they are all at the time of your retirement. At the time of your retirement you are drawing this particular salary. So 5,000 includes that increment, and accordingly you just calculate how many days is required to be taken. So if I take basically from November, I should go back November. So I'll do one thing: April, May, June, July, August, September, October, November, 1, 2, 3, 4, 5, 6, 7, 8, March and February. So for these 2 months my basic pay was 4,000 rupees, and for 8 months my basic pay was 5,000 rupees. So what will be my basic salary, sir? 4,000 into 2 plus 5,000 into 8. How much does it come to? 4,000 into 2, 5,000 into 8. It comes to 48,000. Then we have what, sir? Then we have dearness allowances. Then we have DA in terms. How much DA in terms you have? This is 3,000 rupees per month, and 60% is in terms. So 3,000 into 10 months into 60%, it comes to 18,000. And turnover commission, we have written an assumption that since the question is silent, it is assumed it is not turnover based commission. So the salary comes to what, sir? 66,000. So average salary per month. So this is last 10 month salary, last 10 month salary. 66,000 divided by 10, which is 6,600. So now let us take this. How much is the leave credit? 4 months into 6,600, 10 months into 6,600, 4 months into 6,600, 26,400, 66,000. Actual amount received is 5 lakh rupees, and the limit is how much? 3 lakh rupees. Therefore leave salary exempt under section 10AA is how much? 26,400. For non-government employees it is 26,400. So write 26,400. What is the amount which you get over? 4,73,600 is the amount. 4,73,600. Next question. Mr. Das retired on 31st March 2023. At the time of retirement, 18 months leave was lying to his credit. Oh, what have they given? They have given leave credit directly. They have told 18 months leave is lying to his credit. Leave credit is how much, sir? 18 months. He has received a leave encashment equal to 18 months basic salary. So they have told his leave salary is how much? They have told his leave salary is, leave encashment is 18 months basic pay, which is equal to 1,26,000. So he has got 1,26,000 as his leave salary. His employer allows him 1.5 months leave for every completed year of service. Leave allowed is how much? 1.5 months for each completed year of service. Now that means this leave credit which we have got 18 months, no, this leave credit which they have given 18 months, this is by using this 1.5 months data. But as per income tax law, leave allowed should be how much? Only 1 month. Only 1 month. We'll see the question. During his tenure, he availed 12 months leave. So leave taken also they have given. Leave taken is how much? Leave availed is 12 months. At the time of his retirement, he also gets dearness allowance, which is 3,000 rupees per month. So he is also getting DA. So we have basic salary. Basic salary. What is basic salary, sir? They say basic salary information. Tell me what is the basic salary. They have not given what is basic salary, but they say your 18 months basic salary is 1,26,000. Can you tell me what is basic salary per month divided by 18? So this information is also not given in the question. Divided by 18, which is 7,000 rupees, and we have dearness allowance, and they say it is in terms 3,000 rupees. So total amount comes to 10,000 rupees. Total amount comes to what, sir? 10,000 rupees. Very nice and beautiful question. CMA inter-material question it is. Now what is this question telling? This question has given us the information about leave credit, leave taken, and leave allowed by the company. But the problem which we are facing over here is leave credit which is given in the question is as per. The leave credit which is given in the question is as per which law? The leave credit which is given in the question is as per the company policy, but we should take it as per income tax law. As per income tax law, leave allowed is only 1 month, but here they have given leave allowed how much, sir? 1.5 months. So first, to find how much is the leave credit as per income tax law, we'll have to first find the completed year of service. How many years he was in service? That is not given. So that is the missing information in the question. So that is the missing information in the question. Now can you please tell me what is the formula of leave credit? Can you tell me what is the formula of leave credit? Sir, leave credit is equal to leave allowed minus leave taken. Correct? So leave credit is how much? 18 months. Leave allowed is how much? X number of years into, let us take the number of years, completed year of service as X number of years into 1.5 months minus leave taken. Leave taken is 12 months. So X into 1.5 months will give you the total leave allowed. So total leave allowed is 18 months plus 12 months. So total leave allowed is 30 months. 30 months. So leave allowed is how much, sir? 30 months. So can I say X divided by 30 months, 30 months divided by 1.5 months will give you completed year of service. See, what is X? X is completed year of service. So how much is completed year of service? So completed year of service is, so we get over here 20 years. How much years he has completed? 20 years. So basically first you find leave allowed. You found leave allowed. Divide it by how much is the credit which you get as per company policy, 1.5 months. So leave allowed divided by 1.5 months, that will give you number of years of service, completed year of service. So it is 20 years. It is 20 years. So yeah, so this is as per company policy. Now you should find leave credit as per income tax policy. So leave credit as per income tax law, what is it? Same, leave credit is equal to leave allowed minus leave taken. So leave credit shall be equal to leave taken 20 years into, as per income tax law, leave allowed is only 1 month minus leave taken will not change. So number of days which he was absent, that will be the same, 12 months. So 20 months minus 12 months, it comes to 8 months. So leave credit in the present case is what, sir? 8 months. So now you have got your leave credit, and you have got your average salary per month. There will be no change in this average salary per month because there is no information whether there is an increase in salary or not. So now you just have to apply the formula. I'll just show you the answer over here. Since it was already solved, very recording of the lecture. So we have, see, first leave credit they have given 18 months, leave salary is 126, leave allowed is how much? 1.5 months for a completed year of service, and leave taken is 12 months. So leave credit as per company policy. So first we are finding what, sir? First I'll write over here, finding completed year of service, and then we are finding leave credit as per income tax law. Once we found completed year of service is 20 years, we are finding as per income tax law. So this is the basic working. Apart from that, everything is simple. What is the leave salary? Leave salary is leave credit into average salary per month, which is equal to, first I'll take 8 month, leave credit is how much? 8 month, which we found over here. 8 month into average salary per month is 10,000, so 80,000. Then 10 month into average salary per month, 1 lakh rupees. 10 into 10,000 is 1 lakh. Then actual amount received 126, and limit is 3 lakh rupees. So if you see the taxable amount, it will come to how much? 1,26,000 minus 80,000 rupees. Sir, why is, sir, minus 80,000 rupees? Because whichever is less comes to how much, sir? 80,000 rupees. So leave salary exempt is 80,000 rupees. 126 you have received, 80 is exempt, 46 is taxable. So I'll explain you one more question. I'll just explain that question also in a similar way. So Mr. Akshay Kumar retires from Twinkle Films Limited on 1st February 2023 after rendering services for 20 years 4 months. So he has completed service for how much, sir? 20 years 4 months. His average salary per month for last 10 months is 25,000. So they have given you last 10 months average salary, which is 25,000. He was paid leave salary of 9 lakh rupees for leave credit of 12 months. So here they say leave credit is 12 months, and as per company policy, leave allowed is 1.5 months per year for every year, and they have told he has completed 20 years. Now what is the missing information in this case? In this case, the missing information is leave taken by him. They have given leave credit. Obviously leave credit which they have given, this will be as per company policy. Similar question, but here the information which is missing is leave taken. So first we will find leave taken, then we will apply the income tax law, what income tax law says, and we will find leave credit as per income tax law. I'll repeat. In this question they have given you average salary. What is average salary? 25,000. They have given you leave credit which is 12 months. Obviously this will be as per company policy. They have given you leave allowed, which is 1.5 months for every completed year of service, and he has completed 20 years. So total leave allowed is how much, sir? Total leave allowed is 1.5 into 20, which is equal to 30 months. So 30 months is leave allowed. He has taken leave for 30 months is the leave allowed. He has taken leave for the leave credit which is there is 12 months. So what is leave taken, sir? Leave credit is equal to leave allowed minus leave taken. So leave credit is how much? 12 months. Leave allowed is how much? 30 months minus leave taken. Therefore leave taken will be equal to 30 months minus 12 months. Leave taken by him is 18 months. So this is as per company policy. Leave taken, whether as per company policy or as per income tax law, leave which is taken by you, leave which you have taken, that will remain same. Leave which is taken by you, that will remain same. So leave which is taken by you will remain same. Now we have to compute what? Leave credit as per income tax law. Leave credit is equal to leave allowed minus leave taken. Leave allowed as per income tax law is 20 years into 1 month, minus leave taken is how much? 8 months. Sir, how did you get this? Above computation which we did. So 20 minus 18. So can I say 2 months is the leave which is allowed to you leave credit which is available as per income tax law. As per income tax law, leave credit is 2 months. So now if I want to solve this, what will I do? Same formula, 1 2 3 4, leave credit into average salary per month, then 10 month into average salary per month, then actual which you have received, and limit. Leave credit is 2 months into average salary per month is 25,000. Similarly 10 month into average salary per month. So first you get 50,000 rupees, then you get 2,50,000 rupees, then actual which you have received, how much he has received? He has received 9 lakh rupees, and limit is 3 lakh rupees. Whichever is less, therefore exempt is how much, sir? 50,000 rupees. Taxable leave salary is how much? Amount received minus 50,000, 8 lakh 50,000. What is the answer, sir? 8 lakh 50,000. So here same question I have solved it above here. I'll show it from this point. I'll repeat the question. Akshay has worked in some company, so they have given you completed years of service, they have given you average salary, and they have given you leave credit, and they have given you leave allowed as per company policy. So first we should find leave taken. Leave taken is not there, and leave credit as per income tax law. So these are the two missing information. So first we will find leave taken. So how much is leave taken? Obviously leave credit is equal to leave allowed minus leave taken. Therefore leave credit will be what, sir? Leave credit will be leave allowed minus leave taken will be leave allowed minus leave credit. So we found the leave credit first, then we are finding the leave, missing the words actually. First we found leave taken as per company policy. Leave taken will remain same. Leave taken will remain same. There will be no change in the leave taken, because this is the number of days leave which you have taken, or this is the number of months which leave which you have taken. Now as per income tax law, how much is the leave credit which is available with you? What is leave credit? Leave which is allowed as per income tax law. How much leave is allowed? 1 month is allowed for a completed year of service. You have completed 20 years, therefore 20 into 1, that is 20 months will be allowed, out of which you have taken 18 months leave. If you have taken 18 months leave, what is left over with you then? What is left over? Sir, for me the leftover amount comes to 2 months. So this 2 months will be your leave credit. So we are applying this in the formula and we are getting the answer. We got the answer. Okay, so this is all about this point. Obviously the video will continue, and we are going to discuss about retrenchment compensation and voluntary retirement scheme. We'll be completing the topic of retirement benefit in this video. Okay, let us meet in our next class. Till then, tada, bye bye. Welcome back, friends, after a short break. So let us complete the discussion of retirement benefits in this video only. So this video will be final video for retirement benefits. From next video we'll be doing allowance, then other things which are left over. So here we had discussed about what, sir? First we discussed about pension, then we discussed about leave salary. Now there are two more things which are left over, which is retrenchment compensation, and one is section we'll write it later. Next point for our discussion is retrenchment compensation, and we have one more thing called as voluntary retirement scheme. So now we are going to complete our retirement benefit. If you see, we had written various different components of salary. wherein we have already discussed about basic pay, dearness allowance, bonus, commission, advance salary, arrears of salary. So these were already discussed by us. After that, we started our discussion on retirement benefit, wherein we discussed about gratuity, pension, leave salary, retrenchment compensation, and VRS is something which we are going to discuss now and complete this particular discussion. Then we'll be having only few points left over. Then maybe next Wednesday, on YouTube next Wednesday, the video of allowances will be uploaded. After that, provident fund and superannuation fund, and then we will be uploading perquisites. Yeah, so let us start the discussion on retrenchment compensation. Sir, what do you mean by this retrenchment compensation, sir? Now, there is something called as retrenchment compensation and there is something called as VRS, voluntary retirement scheme. So compensation, voluntary retirement scheme compensation. Sir, what is the difference between this retrenchment compensation and voluntary retirement scheme compensation? The difference is, see, basically, say for example, I have joined a company, or I'm in some government service, so I'm a state government employee. I have joined some particular company. Now I have joined a company and I'm working for that company. I'm now working for that company. Now, say I joined the company at the age of 30 and 60 years is the age of retirement. Let us assume that 60 years is the age of retirement and have joined the company at the age of 30. Now, normally what happens, this is the date on which I should take retirement from the company, meaning this is my actual date of retirement, Now I want to take at the retirement at the age of 54 only. I want to take the retirement at the age of 56 only. The company is not telling me to retire, but I want to take retirement myself. 54 years, after when I was of 54 years, meaning say almost 25 years I have completed in the company, therefore I want to take the retirement. Now, if I am taking the retirement by my own willingness, then it will be called as what, sir? Voluntary retirement. So this is the actual date of retirement. At the time when I am turning 60, I should retire from the company, but I am taking the retirement before that date only by my own willingness. Now, because I am taking a retirement before this particular date, before the actual date of retirement, this retirement which is taken by me will be treated as voluntary retirement. It will be treated as what, sir? It will be treated as voluntary retirement. Then we have one more thing called as retrenchment compensation. Sir, what is this retrenchment compensation? See, sometimes what happens is the place where you are working, they may feel that you are a very good worker, we don't need your services anymore. They may feel that you are a very good worker and we don't need your services anymore. So they may feel that you are a very good worker, Mr. Dilip, but we don't need your services anymore. So in such cases, they are going to tell us, the company is telling me, the government, if I am a government employee, the government, that department where I am working, the department is telling me, Dilip, we don't need your services anymore. Please leave the company. So in such cases, when the employer is asking you to leave the company before your actual date of retirement, when the employer is asking you to retire from the company before your actual date of retirement, then it will be called as what, sir? Retrenchment compensation. So I hope you have understood the difference between retrenchment compensation and voluntary retirement scheme. Retrenchment compensation, you are leaving the company by your own willingness. A voluntary retirement scheme, voluntary retirement scheme, you are leaving the company by your own willingness. Retrenchment compensation, the employer is asking you to leave the company. Now, sir, how much is exempt, what is exempt, etc., that is what we are going to see. From exam point of view, retrenchment compensation is not so important. When compared with retrenchment, if you compare retrenchment compensation and voluntary retirement scheme, out of these two, voluntary retirement scheme is something which is important, but retrenchment is not so important. Retrenchment is what, sir? It is not so important. Okay. So, retrenchment compensation, whatever amount you are getting, that will be exempt under section 1010B. It will be exempt under which section, sir? It will be exempt under section 1010B. So till now we have seen 1010, 1010A, 1010AA, 1010B. So 1010 is gratuity, 1010A is pension, 1010A is leave salary, then 1010B. 1010B talks about exemption for retrenchment compensation. What does it say? It says the same thing, 15 by 26 into average salary per month into completed years of service. Completed years of service. Point number 2, actual amount received. Actual amount received. And point number 3, statutory limit. And what's our statutory limit? 1, 2, 3. Obviously we are going to take whichever is less. Now, sir, what do you mean by average salary per month? In this case, there is a different average salary. See, the formula is same basically. Formula is same. Average salary formula is same. But here, in average salary, you should take, obviously you should take same basic pay plus dearness allowance forming part of retirement benefit plus turnover commission. Plus turnover commission. So if you total this, you are going to get your salary. You are going to get your salary for this computation. But the average salary which you are supposed to take over here is your last 3 months average. The average salary which you are going to take here is last 3 months average. Which average salary, sir? Last 3 month average you are going to take. You are supposed to take what, sir? You are supposed to take last 3 months average. Sir, here what will happen to the completed years of service? If there is any fraction in completed years of service, what will happen, sir? If there is any fraction in completed year of service, that fraction should be ignored. So fraction in completed years of service should be ignored. So whatever fraction you have in completed years of service, that fraction in completed year of service should be ignored by you in your computation. That fraction should be ignored. Okay. So exempt under ... Okay. Now let us solve one question. Basically there are no questions in the material, but still we will be solving one question, so at least the concept will be clear. Mr. Garg received retrenchment compensation of 10 lakh rupees after completing 30 years 4 months. Ignore that 4 months, 30 years. At the time of his retirement, he was drawing a salary of 20,000 per month and dearness allowance is 5,000 per month. Compute his what, sir? Compute his taxable retrenchment compensation. Now here one important point. This question obviously is from CMA material. Sir, how do we come to know when you are solving? You don't have to come to know. You just have to solve the question. I am telling you. Now write a note. First note which you are supposed to write is what, sir? Note number 1 before solving the question. There are some notes which you should write before solving the question. Some notes which you are supposed to write after, at the end. Sir, how will I come to know? Now, if the question is not clear with respect to some point, or if your answer is based on a provision, then always write a note on that particular point first. For example, in our if you remember, we had solved this capital gain questions. So capital gain questions, let us take an example of, say, this compulsory acquisition. We solved some question of compulsory acquisition. We solved some question on this conversion of capital asset into stock in trade. Now here you should write your provision first, then give your answer, then whatever note are connected with the answer, give it separately. Sir, can you show one question, sir? Now this was the compulsory acquisition concept which we have seen. What happens in case of compulsory acquisition? Transfer takes in the year in which compulsory acquisition happens, and the capital gain tax is payable in the year in which you are receiving the money, correct? So now if I want to solve this question, now first I am going to write the provisions of compulsory acquisition, what happens in case of compulsory acquisition. Then I am going to do my computation. Now if there is any note for this computation, then I am going to write that particular note. Now say for example, now this provision, these 3 points which I have written, these 3 points I will just mark and show you. 1, 2 and 3. These are the provisions of the law. What is the provision telling? So write these 3 notes first, then do your computation. This note number 1 and note number 2 is forming part of your computation. It is forming part of your computation. Computation means it is forming part of my this answer. Because it is forming part of this answer, you should write it after this particular point. So you should be careful, meaning if there is any point which you have to explain the examiner before solving the question, then you write a note. Anyways, it does not matter. It does not basically matter. Anytime you can write, but this format is a good format. So what note am I supposed? Sir, why did we discuss so many things in this point, sir? Because here we are supposed to write a note on dearness allowance. The question is silent about dearness allowance. So we will have to compulsorily write a note on dearness allowance, whether we have taken it in terms or not in terms. So note, since the question is silent about dearness allowance, comma, it is assumed that DA is not in terms. See, normally this assumption is logical. Because dearness allowances is used for computation of your retirement benefit. For example, now if I use it for this computation, don't you think the benefit which the employee is going to get is more? He is going to get more exemption. If he is going to get more exemption, from employee point of view, it is good. But if you see it from the income tax officer point of view, it is not good for him. If you see it from income tax officer point of view, or if you see it from employer point of view, income tax officer is going to get less tax. If you are getting more exemption, that means he is going to get less tax. So logically this is correct, but then please note, both the views can be taken. Now it depends on whether you can fight for that particular case or not. But anyways, let us ignore what happens in practical life. We have written a note. Now let us do the solution. So they have asked us to find taxable retrenchment compensation. So Mr. Garg, previous year 22-23, assessment year 23-24, computation of taxable retrenchment compensation. Computation of taxable retrenchment compensation. Particulars, rupees. Amount received is how much? 10 lakh rupees. Less exempt under section 1010B. How much is exempt? Sir, exemption is working note number 1. This note is forming part of your answer. So exemption is how much, sir? Exemption under section 10 10B 1 2 3. So statutory limit also I have written dash 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 dash. 5 lakh rupees is the limit. The limit is 5 lakh rupees. So first we have point number 1. What do we have, sir? Point number 1, we have 15 by 26 into average salary per month into completed years of service, then actual amount, and then we have limit. 15 by 26 into average salary per month. Here average salary per month, obviously we should take basic pay plus DA in terms plus turnover commission. Turnover commission is not given, DA question is silent, therefore we are assuming it is not in terms. So 20,000 rupees only will be taken as your average salary. So in the present case your average salary will be what, sir? 20,000 rupees. 20,000 rupees into completed years of service. What is the completed years of service? 30 years. So 30 years is completed years of service. Then we have actual amount received. So this comes to 346,154, 10 lakh rupees, or limit of 5 lakh rupees, whichever is less. So exemption is how much, sir? Exemption is 3,46,154. So the taxable amount comes to 6,53,846. So this is the taxable leave salary. This is taxable retrenchment compensation. Taxable retrenchment compensation. Similarly, let us do one more provision. Let us do complete the retirement benefit now. Let us do the last retirement benefit which we have. So this is, you can just copy it down if you are copying. Very simple. Retrenchment compensation, from exam point of view, it is not so important. In examination they don't ask a lot of questions with respect to retrenchment compensation. Sometimes they ask question with respect to VRS, and that too they ask maybe in MCQ, maybe they can ask you what is the limit, 5 lakh rupees is the limit, etc. Okay, next, voluntary retirement scheme compensation. Voluntary retirement scheme compensation. Voluntary retirement scheme compensation, as I have already explained you what is this VRS or voluntary retirement scheme. So they also call it as VRS compensation. In examination, can I write VRS, sir? Yes, in examination you can write VRS. So how much is the exemption? It is exempt under, in which section, sir? Exempt under section 10C. So how much is exempt? 1, 2, 3 and 4. So here there are 4 points. Here there are 4 points. Nice, 4 points. Obviously, can you please tell me what are the 2 points? Sir, one will be the limit, sir, statutory limit. Okay, sir, another will be the actual amount received. Okay, sir, and the last leftover point is what you are supposed to tell me. 2 things though are very common. Till now, whatever you have discussed, these are the points which are very common. Now here, first point is your salary per month into 3 months. Basically, you should take 3 months salary into completed year of service. Now one more additional point which is there is logically correct point. Whatever I am going to write now, that is a very good point. Logically it is a very good point. Now what is that point telling? That additional point which is there, extra point, it says you should take your salary per month into remaining months in service. So how many months are left over in your service? See, basically what they are trying to tell you, first take your salary per month and then 3 months salary into completed years of service. So that will give you that retirement amount. You have completed so many years. So I am going to give you 3 months salary for 1 year. I am going to give you 3 months salary as benefit. So how many years you have completed, take accordingly. Or check how many months are left over in your retirement. Check how many months are left over in your retirement, because if you would have not retired, if you would have not taken voluntary retirement, the company would have paid you the money for this month, correct? So check how many months are left over for your retirement. So check how many months are left over for your retirement, because for that period the company would have paid you, salary, the company would have paid you the money for that particular remaining months which are there in your retirement. So you take that remaining months and multiply it with salary per month. Now basically, see here there are 2 points which is important to note. This remaining months computation is very important. In the examination, mostly student will make a mistake over here only. So remaining months means what, sir? Sometimes they will give that there are 24 months remaining in retirement. So how much will you take? You will take 24 months. Sometimes they will tell you there are 6 years 3 months left over for retirement. So now what will you do? Now sir, 6 years means 6 into 12 plus 3 months. So 6 into 12 is how much? Sir, 72, sir, plus 3 months. That means there are 75 months remaining in retirement. So he has 75 months left over for retirement. Then we have what, sir? Sir, sometimes they will give, say he has retired on this date of retirement, voluntary retirement. Date of voluntary retirement they will be giving, and they will tell his actual retirement date as per policy or something they will give. So they will give you the date on which he has taken voluntary retirement and the due date of retirement, by what date he was supposed to take the retirement. Now you see the dates, you see the difference, how many months are there, take that particular months. Sir, obviously here part of month should be ignored. If there is any part of month, say 15 days, 2 days, etc., ignore that. And in computation of completed years of service, fraction should be ignored. So I'll write that point also. Note number 1. Fraction in completed years of service should be ignored. And note number 2 is what, sir? Salary per month. Salary per month. What do you mean by salary per month? Salary per month means basic pay plus DA in terms plus turnover commission. See, normally the salary definition is this. For all the different things which you are going to see, the salary definition is this only. Okay, so let us solve 2 questions and complete our retirement benefit in this class. Next class we are going to start new concept called as allowances. Very beautiful concept. So Mr. Datta received voluntary retirement compensation of 7 lakh rupees after completing 30 years 4 months. He still has 6 years left in his service, that is nothing but 72 months. At the time of his voluntary retirement, he was drawing a basic salary of 20,000 per month. Dearness allowance form parts of his pay. The dearness allowance form parts of pay 5,000 rupees. Compute his taxable voluntary retirement compensation. Assume that he does not claim any benefit under relief. Relief is a separate concept which we'll see separately later. Okay, answer. So you should compute the taxable voluntary retirement. So Mr. Datta previous year 22-23, assessment year 23-24. Computation of computation of VRS, taxable VRS, particulars and rupees. Particulars and rupees. How much is the taxable amount? Amount received is 7 lakhs. Let's exempt under section 1010C is how much? How much is exempt under section 1010C? Sir, exempt amount is lower of three things. VRS exempt under section 1010C. Salary per month. Salary per month is how much? Salary per month is equal to basic plus DA in terms plus turnover commission. So basic is 20,000 rupees, DA is 5,000 rupees, so it is 25,000. 20,000, 5,000, 0, so it is 25,000. So 25,000 into completed years of service. Just write it as remaining months. So salary per month is 25,000 into, I should take 3 months salary into completed years of service is 30 years. Then I am going to take 25,000 into 6 years into 12 months. Then actual amount received. So here I'll get, to take it, shift it little bit. So here I'll get 22 lakhs 50,000, then 18 lakhs, then 7 lakhs, finally 5 lakhs. Finally 5 lakhs. So I should take whichever is less. So whichever is less means what, sir? 5 lakh rupees is exempt. So here how much will be exempt? 5 lakh rupees is exempt. Therefore taxable amount is 2 lakh rupees. Taxable amount is how much, sir? 2 lakh rupees. Similarly, one more question, I'll just give it. You can try it yourself. Mr. A, aged 54 years, who has put 20 years of his service in public sector undertaking, voluntarily resigns from the job under a scheme of VRS, voluntary separation. He had 7 years 2 months. 7 years 2 months. So 7 12s are 7 into 12, we have 84 plus 2 months. So we have 86 months remaining months. His last drawn salary is 10,000. He is paid 12 lakh rupees as voluntary retirement compensation. Calculate the amount of compensation, taxable amount of compensation, and will your answer change if the compensation is 6 lakhs instead of 12 lakhs? So let us see exempt amount. Answer: computation of taxable VRS compensation. Particulars: if he receives 12 lakh and if he receives 6 lakh. Amount received. So amount received is how much, sir? 12 lakhs and 6 lakhs. You don't have to write it, I mean the above point which I have written, not required, less exempt under section 1010C. Please note, your exemption amount will not change. Whether you are receiving 6 lakhs or 12 lakhs, your exemption amount will not change because exemption is based on the formula. But the taxable amount will 100% change. So VRS exempt under section 1010C. Point number 1, salary per month into 3 months into completed year of service. Point number 2, salary per month into remaining month. Next, actual amount. Finally, limit. Ting 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 ting. Salary per month is how much, sir? They have told 10,000 rupees into 3 months into 20 years. 10,000 rupees into remaining months in service is, can I say, 86 months. So how much does it comes to? The calculation comes to, first case it is 6 lakh. Then we have 8,60,000 because 86 months. Then we have 12 lakhs, and it will change whichever is less. So first case it will be 5 lakhs, whichever is less is 5 lakhs. Second case also it will be same 5 lakhs. So taxable amount will be 7 lakhs and 1 lakhs. This completes our beautiful discussion on retirement benefits. So all the retirement benefits have been done. So in our next video we are going to study about what, sir? We are going to study about allowances under salary. Nice, beautiful topic, very important topic also from your exam point of view. So let us meet in our next class. Till then, tada, bye bye, take care.